Good morning, traders. It's 8:03 a.m. Chicago time on Wednesday, the 23rd of March, 2022. This is episode number 2197. We're getting pretty close to 2200 episodes. Thanks for liking, subscribing, and setting alerts, of course. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I want to first get a mic check, make sure that the sound is good. The sound's been iffy on this broadcast software. So the first things first, we're seeing a mild risk-off sentiment currently. The S&P is trading well below its settlement price, down 54 basis points and 25 points. Across the board, we're seeing somewhere between 50 and 85 basis point drop. In Europe, it's a little bit more volatile. Europe, I don't know if anybody tracks this, but the beta of the indices in Europe versus the U.S., I would call it at around 1.5 currently. There's just a lot more volatility coming out of Europe than the U.S. with the same swing bias. So with that being said, we're looking at, again, a mild risk-off market. There's more. Again, I said yesterday that the Fed is quite hawkish and is really trying to get the market to set expectations for 50 basis point hikes in May. And we had another Fed speaker that was talking that up. So that's always going to get the market's attention. Buyers have been in control now for a few days, for about a week now, with a rise of almost 400 points in the S&P from last Tuesday's low. So it's been a rip-roaring rally so far, but we seem to be coming off a little bit today. So that's where we stand. Looking at the calendar, we have new home sales. We did get the inflation rate out of Great Britain, came in higher than expected at 6.2% versus 5.9%. Month on month, 0.8% versus 0.6, with core inflation at 5.2 versus 5. So all of those came in slightly worse than expected. Fed's Chair Powell was speaking earlier today. We get, again, new home sales as the headline number. For today, we're expecting 0.81 million units, 0.81 million units. Then we get crude oil inventories. Crude is strong again. Hang on. Are you saying that I'm not broadcasting? As far as I can tell, I am broadcasting. Just refresh. Yeah, I don't know about these technical issues. Yeah, you just need to refresh refresh your browser. So yeah, I don't like these issues because they're just very disruptive. In any case, where was I? I lost my train of thought. Yeah, so crude oil is popping higher, $4. There's still some really important supply issues. There's some talk that the U.S. may drop some of the sanctions against Venezuela, and that production can be really ramped up quickly by American companies there. We're friends when we need oil. Fed's Daily speaks later at 11:45, and then we have numbers out of Australia, Japan, and there's also the EU Council meeting. And I believe Biden heads to Europe today. I thought it was yesterday, but it's actually today. So that's where we stand. Crypto keeps holding steady. Crypto keeps holding steady above 40,000 in Bitcoin so far, and it's been going strong. Hang on one second. I'm going to stop the stream and restart it. 1 second. Okay, I just I just restarted the stream. Um, Hopefully that solves the problem for some of you. Okay, let's move on, folks. Really need to get through this content. 58,000 contracts traded in the S&P with 50% of the inventory below. That actually seems incorrect. No, it is correct. Um, 1 second. That seems incorrect to me. Yeah, this starting from home is really not the greatest. No, it is correct. 50% of the inventory, because it was basically the same as yesterday, 50% of the inventory is short this morning. The range is 37.5 points. Let me check that. Is it? Yeah, I guess 37.5 points. And the point of control is at 45.05. We're looking very much today like we did yesterday on the pre-market open. On yesterday, let's take a look at what happened yesterday. Yesterday, we had a very brief open auction that immediately kicked off to the buy side, and we really held steady to the upside yesterday. We ended up executing scenario two yesterday versus scenario one. Scenario one was expected to push to 44.96 and come back off into the range. Yesterday, we poked immediately above the prior day's range. I actually took a scalp short here, which very quickly paid out on scales, but very quickly pushed higher. Once we took out the prior day's high, which was the overnight high, which was the prior day's IB, pull back to the mid, held the mid here. Once this occurred right here, we are basically in initiative buying spree. The IB, you'll notice, was created mid-rally, so not as significant as it normally is. We don't really see sellers popping in strong right at the IB high, or the IB being formed by a swing high. So that tells us the IB high needs to be, you need to lay off of trading that 44.96. The 44.96 being the key test level. That is an MC point of control. That is the most prominent area here. And so we expect chop in this area, and that's exactly what we got. Really beautiful touch of the mid here with a higher low in case you were late. And then we finished with a run to the high. It flagged yesterday. If you're a Convergent member, I would strongly suggest you watch the you watch the trade talk yesterday if you're a Convergent member. Just get on there and take a look. We talked about how this is really flagging, not giving up any territory, and it's very likely to move higher, and it did into the close. Yesterday's high was 45.1475, with the overnight high today being 45.14. So what have we done since? We have basically put in what is a really terribly weak low at 45.14. Terribly weak low at 45.14, and have proceeded to sell off from there. We have left behind the overnight point of control. We are well below the full session VWAP, full session mid, and the one-time framing ends at 67 here. So we're moving into, we've pushed into the 73 area. 73. We have an overnight low so far of 76.5. We have a weak low again on the low. This is very likely to go back and test that 67 and come back into this 44.60 area, which is also the site of the 200-day moving average at 57.50 currently, 53 to 57 depending on your software. This is a full session 200-day, so it's slightly different. But This is looking like a corrective day or a selling day. There's quite a bit to deal with right here at 67. You could see 65, 75, multiple highs here at the at around the 67, the 67 low, all of it occurring right here. And I think that if it holds this, it remains up here and it gets attracted back to the 96.44, 96.4500. If it takes out the 67, especially if the 67 um, becomes resistance, then we are very likely to push to 44.40 and other areas. What are we expecting for today? Again, a cleaner look at all this. Our magnet is up at 4,500. Our over underline is right here in the 44.58 area. This is the key test area. Again, 67 at first, 67 right across here. And then 44.58. So what I'm expecting today is an open auction that takes out the low, consolidates. I expect buyers to come back in, but overall I'm expecting this to pull back to 67, breach into 58 and bounce. So 58 right here, 67. This week low is likely to go. The 77 is likely to go. That's scenario one for you. Scenario two, an open that tests into the 67, pokes through, does not find significant sellers, gets bid back up to the open, consolidates, tests the VWAP and the mid right here in the 44.96. Remember the 96 area right here. And then comes right back to prior settle at 45.05, 45.05 for a test upwards. That's the expectation. Those are the expectations for today. If we give up the 67 and 58, we are very likely to go down and test the 44.30. I'll show you where that comes from. The 44.30 right here, and then the 44.08. 44.08. 45.08 above shows an excess high. So there's some single prints up there. 08, we are below the 08. That looks like a 9. We are below the 08. To me, this looks like a day with a downdraft. I'm expecting the market to really have a hard time holding on to these higher prices. Okay, so that's where we stand. Here's a quick look, just so you understand where I'm coming up with these numbers from. Just a quick look here using a TPO chart. So the 44.30 really comes from this spike right here, a 44.30 area right here. We have a lot going on at the 05 to 00 and 96, and we have been traveling up. You can see the point of control is traveling up, traveling up, traveling up, traveling up, and then today it's below that. We're trading below that down here at 81, and so this is starting to look like a market structure high forming. As long as it does not get back above the 96,500, 4,500 area and stays offered, it is likely to test down into the 30, and then we're likely to make our way back to this 20 low volume node before we start climbing this Mount Everest of volume down here. So this looks like I'm giving you the finger. I'm not, but this is how things are shaping up currently. Okay, I'll leave you with that. Sorry about the technical issues. I don't know how to help that. YouTube seems unstable, or maybe it's my connection here from home today. I'm starting from home and heading into the office here in a half hour. Maybe it's my connection, but sorry. You can watch the replay on YouTube probably. Good luck, and I'll catch you tomorrow morning. Take care.